If you are a beginner at order flow, this is the best strategy you can use to start. It's called the IVB or Initial Volume Breakout. Here's how it works in 30 seconds. First, you need to be on the Nasdaq or the ES and take the first 15 to 30 minutes candle of the session. This is what you call initial balance. Second, you wait for a breakout. And be careful, because here's where people up and lose money. You need a breakout with a full candle, no big wicks, and with high volume and big trades from smart money. But all of this is useless if you don't know where to place a stop loss and a take profit. So you wait for a test and wait from an order flow confirmation. It can be absorption, it can be exhaustion, it can be momentum. So you can cover with your stop loss below the area and boost your risk to reward. For the target, you can aim for a fixed risk to reward 1 to 3, 1 to 4, 1 to 5, but I have an even better option. You open deep charts and you add deep IVB. And not only this will automatically plot the initial balance, but also give you statistically what are the best areas to put your trades at break-even at a protection level, what is the average best take profit over the average of the last 2000 sessions, and if you feel aggressive, also the standard deviations. Follow for more value or comment IVB to access this model on deep charts.
Hi guys, I'm an EA developer. In this video, we're going to develop a strategy inspired by the person many consider the #1 scalper in the world. Now, I say inspired because we haven't coded the strategy 100% to his exact model. We've added our own unique algorithmic twist to the execution. Let's see how it works. The setup, defining the range. Take a look here. First, we identify the high and low of the 15-minute time frame right at the session open. He mentions a 15 to 60 minute window, but for our automation we've locked in the 15-minute high and low as our battleground. Once the range is set, we patiently wait. We don't touch the market while price moves inside this box. We are waiting for one thing: the institutional breakout. But how does a bot know the difference between a retail fake break and a true institutional move? This is the genius part of the code. Look at the screen. Section 4 of our evaluation logic doesn't just look at price. It looks at the DNA of the candle using two formulas, the efficiency ratio and the clean move score. Think of it like a car trying to climb a hill. A retail candle is like a car with its tires spinning in the mud. It uses a lot of effort, total ticks, volume, but doesn't actually gain much displacement, distance. Our bot calculates the efficiency ratio. If the price moves 100 points but took 500 ticks of grinding to get there, the DNA is weak. But if it moves 100 points in just 110 ticks, that's institutional. The clean move score then ensures that at least 50% of the candle's life was spent in this high efficiency state. We are looking for clean ice, not muddy grinding. Right now, you're looking at a bearish institutional move. The bot sees that DNA highlights the candle, and the moment it closes, boom, a sell order is opened immediately with a crisp 1 to 2 risk to reward ratio. Now our bot enters aggressively here because that's how we programmed this version. However, as the world's best scalper teaches, the safest way is to wait for a retrace to the absorption level. And look at the screen, the market did exactly that. It retraced back to our entry level and then dropped significantly. Our aggressive entry worked, but the retest was the pro confirmation. Here is another setup during the New York session. Ranges are highlighted, we're waiting, and there it is. A bullish institutional move. Again, our bot doesn't hesitate. It enters at the close, while a patient trader might wait for a retest of that absorption zone. Our aggressive scalper logic catches the momentum early, and it plays out nicely for another 1 to 2 win. But let's fast forward. I want to show you the defense. Here, price breaks the range, but look, no trade. Why? Because the candle had no institutional energy. It was muddy. The setup was invalidated. Next setup, another break, but it's a fake out. The bot stayed flat because the DNA wasn't there. Price didn't even break the range, so the bot stayed idle. This is how you protect your capital. Now, look at this. Why didn't the bot open a sell trade here? You and I clearly see a long, strong bearish candle, breaking the low. Retail traders would jump in here. But the bot sees something else. This is what professional traders mean by deep chart analysis. Even though the candle is long, the micro displacement and efficiency were too low. It was likely just a slippage move, or a low volume vacuum, not a true institutional drive. The bot checked the DNA and said, "No thanks." That's the difference between trading what you see and trading what is actually happening. Finally, the reality of trading. We got a sell entry here, but, oops, stop loss hit. But look what happened next. Price broke the other side of the range with massive institutional energy and took off. This is where waiting for a retest could have saved us. If we were patient, we would have seen the first move fail and caught the true move on the reversal. I'm showing you this loss because it's important. Even with the best DNA filters, patience and retests are your best friends. Overall, the institutional volume break is a powerhouse when you filter it with the right code. Whether you trade it aggressively like our bot or wait for the retest like a pro, understanding the DNA of the move is the key to escaping the retail trap. If you enjoyed this deep dive into automation, hit that like button, subscribe for more EA builds, and I'll see you in the next session.